Tick reversal is a brand new strategy we have developed in the last couple of weeks. Started trading it in our micro stock index E-mini and micro portfolio for 25 stock index futures. You can trade it on micros, you can trade it on E-minis, and it includes 25 strategies. This is one of the new strategies that's been added. We developed this a couple of weeks ago, and it is at equity peaks. This strategy does not work prior to 2018, and it works best in recent market environment, recent volatility, these dollar reversals that we're seeing in these markets. And you can see today on March the 7th, it is making brand new equity peaks. I want to reduce the time period for which you can see this. You can fully see the most recent results and how well it's done. Again, it is a downward sloping equity curve prior to 2018. If you look for prior to 2018, it is straight down. And sometimes we see new market patterns as volatility. Volatility can change microstructure in the market and create new patterns. And this is one new pattern that we've seen. You can see the results here: $12,000 max drawdown, $93 average trade profit. And it gets much better on that average trade profit in recent years. You can see in the last 12 months, it's up 100K. In 2022, it's up 41K. In 2021, it was up 60K. 2020 was up 35K. Let's take a look back to the beginning of the pandemic. Let's just go back 2 years from now, and I'm going to adjust this, and I'm going to tell you about the parameters related to this and the general idea behind why this strategy works. So here are the results going back 2 years from March 7th, 2022. The pandemic started roughly 2 years ago. Volatility has been amped, and we are seeing a new regime in this market based on the number of point value reversals, the size of the point value reversals, the number of those on a daily basis. And this strategy looks to catch reversals. It's a very simple pattern, and I'm going to go over the parameters here in a minute. Let's look at the results. $185 average trade profit. This is with $25 round turn slippage and commission. So even if we have more than $25 round turn slippage and commission, the average trade profit is more than sufficient. You still are at 11,830 on the drawdown. And the maximum stop loss on this is $2,500. We use a variable stop loss with a maximum threshold, though, of $25. We use the ranges. So when we edit this strategy, you can see the inputs. I'm going to go over the inputs on how this works. And if you take a look at the number of contracts, you update that there. Don't trade if holiday. We have a list of holidays when the stock market is closed or only open for half a day, and we don't trade on those days. Max daily entries, no more than 3. Max daily losses, you could add that. You could customize this strategy if you wanted. By default, that is false. You could say, you know what, I'll have 3 maximum daily entries, but if I'm at 1 loss on the day, I want to just stop for the day. And so it may improve or may make your strategy worse when you do that. Daily loss limit, you can have that as well. Typically, you have right now 3 max daily entries, and the maximum stop loss is 2,500, depending on the range. But you could also override that with a max daily loss limit, and that would work on a closed trade basis. It would not close out an existing position once it hit that number. It would just be based on if the current loss was that much for a day. It would not take new trades. Weekly loss limit, you could add that as well. Monthly loss limit, again, those are closed trade basis. It won't enter a new trade if it exceeds that threshold on this amount level. Long start time, we just start 5 minutes after the open, and we trade until 15 minutes until the stock market closes. The day session for stock, same on the short side, and you exit 5 minutes before the day session ends. And so you can use day trade margins on those. This could be set to true so that it would exit on holidays, but we don't trade on holidays, so it doesn't really matter if this is true or false. It shouldn't change it. You should always exit at 15:55. And sometimes if you say don't trade on holidays is equal to, if you say that is equal to false and you want to trade on those holiday half days, then you'd have to adjust your long exit time and short exit time, or manually exit at the end of the day. So you have this exit on close set to true, so it would back test exiting on the last bar of the day. In case you did trade on those holidays, you would know what your results were. In order to implement that in real trading, you have to manually exit right at the close if you do decide to trade on holidays. Stop loss on the first bar, This is when you separate long and short stop losses. It does not have a stop loss on the first bar. And so these are 1 minute bars, so it's not a big deal. But we are not using traditional stop losses, so that's set to false. Stop loss long is set to false. Stop loss short is set to false by default. Profit targets, these are not traditional either, so those are set to false. We are using an RF stop loss on this. We set that to true. RF means range filter stop loss, and we look at 2.5 times the average range of the last 27 15-minute bars. There's 27 15-minute bars in a day session, and data 2 is 15-minute bars of the day session. So we have a multiplication factor of 2.5, and so take the average range of the last 27 15-minute bars, and typically we've looked at maybe using 50 points as a cutoff point, which would be $1,000. This multiplies that by 2.5, which is $2,500 if it were 50 points. But then you set a maximum loss limit of 2,500. You don't want to scale infinitely. For example, if the ranges were all of a sudden 10 times greater than they've ever been, you don't want to just have your stop loss 10 times greater. You have this max stop loss threshold limit, since most traders have finite accounts, and so you want to also manage that with the actual absolute dollar risk per contract. These are all per contract. And so you can do the same thing with a profit target, range filter profit target based on the range. We don't do that in this strategy by default. You could adjust that if you want. You could also use stop losses by percentage not of account but of the market. So 1% market move could be a stop loss percentage. This is how we exit on this strategy. We use a 0.8%. An 0.8 of 1% move is our profit target on the long and short side. So using a market move to determine when to get us out of 0.8% on both the long and the short side, and our long and stop losses are also the same on this. So that is how you set up this strategy by default. That's what all those parameters mean. Now we go over a little bit of how the strategy works. So here is a very simple setup. This is how this strategy works in general. I have two proprietary rules that I don't disclose, but we take entries between 9:35 and 15:45 most of the day, so we can take an entry up to 10 minutes before we exit the position. So in 5 minutes after the market opens for the day session. Then we have two proprietary strategy-based rules based on an NYSE tick using very generic parameters, unoptimized. And then for longs, we make sure that the close of the current bar is greater than the day session open for longs. That means the close of the current bar, not the close of the day, but just basically the current price. The current price at the end of the bar is greater than the day session open for longs, or the close of the current bar is less than the day session open for shorts. We enter on a market order for longs, enter on a market order for shorts, and we exit at 5 minutes before the stock market closes, or with the range filter stop loss, or with the percent market move for the profit target. So it's a very simple strategy. This is the only thing that is really proprietary in this setup. So the rest of this is very simple, generic ideas, and we're using very generic parameters, unoptimized. So seeing a lot of reversals in this market, and this strategy can take advantage of those short-term reversals. You see, for example, the market is shorting when it's down, but we're looking for bounces to short. See, on Friday, we wanted to take a counter trend trade. The market is down, it's going down, but we short it as it rallies. We shorted as it rallies, shorted as it rallies. And so, you know, the market is wild. Right here, the market went to go long as the market direction is up now. And so we buy it as it goes down. Hits the profit target, buy it as it goes down. And so right here, short it as it goes up, buy it as it goes down. Here's just some of the trades you can see. Some of the moves down and up are small, and some of them are fairly large. This is a very small counter trend move, and this is a fairly small counter trend move. Sometimes you're in a situation where the market does not move a lot, so you have to catch it in a small counter trend move, or you'll miss it. Right here, you'll miss that if you wait for a big move, and right here you'll miss it if you wait for a big move. And then other times you can see that you know, you needed a much bigger move and then you got stopped out. This would have gotten stopped out. This market reversed anyway, so there's times when, you know, you could have waited for a larger counter trend move, but you have to use the same set of rules each time. You don't know, you can't predict the future. In this case, stopped out that swing high, got back in, and so that is the nature of this system and basically how it works. And one of the new strategies we're trading in 2022 in this current market environment.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.